Hi guys, welcome back to the channel. My name is Dave, and today I want to take a look at AIPI, which is Artificial Intelligence Premium Income, all rolled into one ETF, and it comes to us from RecShares. Now, this is one of those ETF offerings that has that outsized yield. In this case, around 35% if you look at it on an annualized basis. So I'm not always a big fan of that type of strategy. I want more of a realistic long-term yield. But I'm willing to take a look at this one because when I looked at the total return since inception versus the NASDAQ 100 and versus the S&P 500, it's beat them both. So it's worth a closer look. On the other hand, it's only been out for 8 months, so might have some work to do. But anyway, let's take a closer look at AIPI. If that is what you're looking for, please stick around. Boop. Now, I have reviewed one other product from RecShares, and that was FEPI. That's their Feng and Innovation Fund. I have a video. It'll look like this if you want to check it out. So if you like this idea, or probably like that idea. When I reviewed it, I was kind of intrigued enough that I added a couple shares to my portfolio to see how it would perform and also to see what the tax situation would be like at the end of the year because I put it in a taxable account. I've been reviewing a lot of these covered call ETFs, and I kind of want to summarize all that information, and I'll be doing a video soon. So like and subscribe if you like that type of idea, because I want to see which ones are the most tax efficient, at least for 2024. It will change year to year. But that's a whole nother video. But anyway, as I'm looking at FEPI now and comparing it to AIPI, they're very similar. The setup's very similar. They follow a different index, but there's lots of overlap. So with FEPI, when I bought that, still today, there's 15 different stocks in that. 13 of them can be found in AIPI. There's only 2, which are Netflix and Tesla, that are not included in AIPI. So with AIPI, you get 25 stocks total in that one. You get the 13 that are in FEPI that overlap, plus you get 12 more. So there's a little bit more diversification if you go with AIPI. So in hindsight, looking back now, which it wasn't available when I bought FEPI, I might lean towards AIPI if you like this idea. So that's a consideration as you look at these two products. And you can see from this chart that since inception of AIPI, it has outperformed FEPI in a comparison of the two products. So yeah, it's done a little bit better. FEPI's been around a little longer, but since inception, AIPI has outperformed its sister ETF. So something to consider. Now, jumping over to the website here for RecShares, you can see AIPI, the Rex AI Equity Premium Income ETF, and that distribution rate, quite impressive, 34.8%. Disclaimer right below it, right? So that 34.8 is the return based upon their latest distribution. If you annualized it, the distribution rate represents a single distribution from the ETF and does not represent its total return. Current distribution consists of 100% estimated return of capital. Stress the estimated. We don't know until we get our tax filings at the end of the year. You can look at the 19A1 notices, but until you get your tax return, you don't know. So be aware of that. But I expect it to be a lot of return of capital. So the question to you, the investor, is does that work for you in your tax situation? Are you trying to defer taxes? Are you trying to kick them down the road and have them come back to you at a later date because you're making a lot of money right now, whatever your situation is? That's something you have to decide for yourself and how this might work for you with your current objectives. Now, the objectives of AIPI is to own AI stocks, then write covered calls against every single position at 100% of the value to equal income potential. That's the goal. So again, inception date for this particular one, 6/4 of 2024. It's already has $267 million of assets under management. So it's going pretty quick for this fund. The expense ratio is 0.65%. You know, that always gnaws at me, but that's about the going rate for these types of funds. I've seen worse and I've seen some better, but it's kind of right there in the middle. As far as AIPI distributions, again, there's that 34.8% rate based upon their distributions that they've got coming out here. We don't have a full year yet. But what I can say is for income investors, what I've been told a lot, they prefer level distributions. And these look pretty level. So it's not varying a lot month to month. I think that helps people out because they truly look at this as a paycheck kind of idea, right? I'm going to invest in this, I'm going to get a paycheck. But just don't be fooled or tricked into believing that it's always going to be 34.8% of whatever you invest, because I expect a decline in this fund if they continue to distribute that at all times, right? So hopefully you understand that as the NAV erodes a little bit. Rolling down, AIPI. So what do they invest in? Well, they invest in this BITA AI Leaders Select Index, which is a rules-based composite index that tracks the market performance of companies. And if you look at that BITA AI Leaders, you can find information on that and exactly how they select the companies that are going to be in that index. We'll get into a little bit of that when we check out the prospectus. And then you see the holdings over here. And number one, right at the top, we'll come back to this PLTR, Palantir. Very high flying stock at the moment. This thing's done tremendously well, but it's very expensive stock is a simple way to put it. I wouldn't invest in this myself right now because I think it's too expensive, but I would have missed out on a lot of gains in the past. So I'm not a stock analyst. I guess I'm just wrong a lot of times. So anyway, PLTR is their number one holding. Again, that'll reset because they do this on monthly. They do a rebalance here. So won't always be at 12.73%. It should top out around 10%. And then in between the month, if it has growth, you'll see that creep up there. Palantir, CrowdStrike, ARM, NVIDIA, IBM, Meta, Qualcomm, so forth and so on. And now let's take a closer look at these holdings along with the options that they currently have in place. So now let's take a look at all the stocks and options that are in this fund. And you can download this right from the website. Right at the very top, you're going to see PLTR, Palantir at 12.73% of the weighting, over $34 million in the fund right now. And this particular stock has been on an outstanding run. I think it's very expensive. I wouldn't be buying it right now myself, but hard to argue with the results. If you go back to the date that this fund started trading, Palantir, I'll put it up right now, up around 360%. So this thing's been just skyrocketing, right? So that's great, but the problem is this is a covered call fund. So it's not going to be able to benefit from all that because we're capping the upside. When we say capping the upside, when we sell a call at a certain strike price, then it goes past that strike price, we miss out on all those gains. So that's a negative. One of the positives, though, I think in this fund is that it does rebalance on a monthly basis. So because it's a covered call strategy, I think that's a smart strategy to put into the fund. So that's one of my favorite things about this one. One of the reasons that I actually bought a few shares of FEPI is because they do that. But anyway, I digress. So this one up here at the top, you see it's 12.73% of the fund. If we start scrolling down and you see the other ones that are in here, Apple, Intel, all great products, you know, a great fund. Concentrated, yes, but you'll diversify in other ways. So you can be in this type of fund and feel okay. You just want to diversify in other places. Anyway, scroll down and we start to see all the option trades after the list of stocks. So just look at this first one. This is Microsoft, 221. They typically do all monthly options or a little bit shorter dated. So this is probably a shorter dated one because funds were coming into the ETF and they decided to put on some call contracts with Microsoft. So this is a 221 expiration, 440 call. And right now, this negative number means that's the price that they would have to pay to get out of the contract. So they probably received, I don't know, maybe $500. And if they wanted to go to buy to close, they'd have to pay $212.87 to get out of these 4 contracts. So all these negative numbers is the cost that it would take to get out. Doesn't mean they haven't made money. I don't know what they sold them for. This is how much it would cost right now to get out of those contracts. And a lot of those are based on the strike price, so that call 440. But again, I'll put Palantir up here because that's the example I want to use. So right now it's right around $108 a share. So if we start looking down through here for call contracts, call contracts on PLTR, what will we find? And because it's been on such a tear, we're going to see Palantir call at 110. Not too bad, it's at 108. So we have a chance of this expiring by 221 under that strike price and keeping all $11,000. These 62 contracts could go to zero if it stays under our strike price. But again, it's at 108, pretty close. You start seeing the values go up. As you go down further and further and further, go all the way down to the last page, we're going to see a couple different Palantir trades. One here is 403 contracts. It's now worth $685,000. The strike price of 85. Again, it's all the way up to 108. So when we cap our upside, again, it sounds so innocent, but it can really be damaging in the sense that you get to ride that stock price higher, but you're capping the upside, meaning you look at it as two different trades. I own the stock, I'm benefiting there, but I sold an option and I have to pay a hell of a lot more money to close it out. And that's where we can get some of those big losses on the option side, and why sometimes they have a lot of return of capital that they can distribute based upon those losses that is going to be tax efficient, but it's a return of capital nonetheless. And all the way at the bottom, you can see the bulk of this was put on probably on day one when it was probably worth $65 a share, has a strike price of 70, and now it's at 108. So that's 38 points or so that they got to pay for times 2,610 contracts. That's 261,000 shares. That's pretty substantial, right? That's $8 million to get out of this right now if it stops going up. So you can see that there can be some negatives to selling these calls and capping our upside. Sounds so silly. The problem is if next month Palantir crashes back to $70 a share, that's where you can start to lose a lot of value in these funds, and that's where it can be a little bit dangerous. But call options, things like this are great, but they can also be damaging. You can lose a lot of money by capping your upside and then having that revert the next month. I'm done. And let's quickly hit some of the highlights from the prospectus. I mean, it's always a highlight when you're reading a prospectus, right? Anyway, we've covered some of this already. Operating expenses of 0.65%, $65 per $10,000 invested. It follows this index called the BITA AI Leaders Index. The fund is an actively managed exchange-traded fund. You have more information about the index. Take your time if you want to read about that. It talks about how the index is built up here between purity leaders. I wouldn't qualify for that. But they also have key enablers. And I think I could qualify as a key enabler.
So you're telling me there's a chance? Yeah!
Anyway, the index is rebalanced monthly with purity leaders weighted by average 12-month trading volume, subject to a 10% cap. So again, that 12 plus percent that we saw with Palantir is because of recent growth over the last few weeks. And key enablers equally weighted. The index is reconstituted quarterly by employing the process described above. So we could have new stocks coming in, old stocks leaving on a quarterly basis, and it's rebalanced monthly. And as of April 30th, 2024, going back a ways, the index included 25 companies, and that's still where it sits today. Now, as far as the option strategy, again, we're talking about the fund strategy. The fund intends to write call options on approximately 100% of its holdings of each portfolio security and will not write call options on securities that the fund does not hold. Okay, so as the stocks, it sells these covered calls and it does against the full value of the fund. Do I prefer that? No, I like having a little bit of growth. Some of my other reviews, we talk about that, right? There's some different covered call ETFs out there that will only write against 80%, 70% of the fund, allowing for some growth. I like that concept. I would take a reduced amount from the income side and accept a little bit more growth. I mean, imagine having some of those Palantir options just growing right now. I think that would be wonderful. Well, it would be wonderful. I mean, in hindsight, we know that. The fund's investment strategy is to write call options that are slightly out of the money, which will allow for some capital appreciation as well as income generation. The degree to which the fund's written call options will be out of the money when written will depend on market conditions at this time. So if you're not familiar with the out of the money concept, the stock's trading at 100, they would sell a 105 call, allowing the stock to rise from 100 to 105 uncapped. And then they have that call option premium that they also collect at that point at 105, right? They sold from 105. So they get that little bit of a benefit as well. But again, just like not selling against 100%, my preference personally would be to sell further out of the money when you have really volatile stocks like this. Just personal preference. You can do this yourself too. You can buy this fund and then not spend any money and buy the stocks that are actually in the fund too and uncap it yourself. That would be a solution. And then the fund typically will write call options with a term of 30 days or less. So again, they establish these on a monthly basis, sell out a month, But as funds are coming into, they're adding layers because they're going to sell against the full value of the fund whenever that comes in. So that's that. You can scroll down and read about the rest of this. There is concentration risk within the industry, so that is true. But overall, that's the fund and how it operates. And now let's jump over to Seeking Alpha really quickly and take a look at AIPI. All the charts that you've seen tonight have been from Seeking Alpha. I am a Seeking Alpha affiliate. There are affiliate links down below. If you're looking for a stock and ETF research tool, I think this is a great one for these types of products. If you walk out on the street and you ask somebody about Apple stock, they can probably tell you a little bit about it. But if you ask them about AIPI, they're not going to have a clue, and most websites don't either. But here on Seeking Alpha, you're going to find solid analysis from authors talking about this particular product. In this case, we've got 4 different reviews so far for a product that's been out for 8 months. We've got 3 buys and a hold. So Steven says buy, John says buy, Kevin says buy. I say, I'm probably with the hold guy, honestly. Take a closer look at it, but it might be right for you. So again, if you're looking for something to research these types of products, check out Seeking Alpha. It's a good place to get started. So another interesting fund from RecShares. Let me know down below what you think about this fund. Is this a buy? Do you already own it? Are you considering buying shares, or are you going to stay the heck away? For myself, I already own some FEPI, and that's about the far end of the curve as far as these types of products that I go. I probably won't add this one at this time, but I am intrigued by it, so I'm going to continue to watch it. Maybe I'll switch it out because I think it does offer that little bit extra diversification. I think they benefited from a strong year, right? They released this 8 months ago, and it was a good year so far, so that's probably part of the reason that you see that good performance. I actually like a more reasonable distribution rate. If they lowered it a little bit, I think it would make more sense to me. So if they sold against a portion of the fund, or if they sold further out of the money and utilized the volatility in these very volatile options against these particular stocks, I would be more attracted. So if they said, it's going to be 12%, but look at the upside now. Look at the growth, because we have all these shares that are uncapped in this Palantir trade. It's incredible, right? I think I would be more attracted to it. Let me know what you think, though. I'm curious. And you might also be able to utilize a product like this and pair it up with some of the underlying stocks, the NASDAQ or the S&P 500, to boost your income and offer a little bit of a hedge to your portfolio. So if you're long Palantir stock and some of these other ones, instead of trading options yourself, you could add this, and maybe stripping off some of that income and diversifying it yourself could be a way to utilize a product like this. I'm not sure. Let me know what you think. If you have any questions on this, ask down below. Like and subscribe if you like this type of content, and we'll see you next time. Take care. Whoop.